Traders, welcome back to another price action trading lesson. We're looking at S&P 500 mini futures and the time frame is 2000 tick chart. As a price action trader, my first goal is to identify the overall market structure before the market opens. And I have trend range structure, spike up, spike down. As you can see, I'm following the trend line rule. There's always a trend present, a channel present for every single move on the chart. Okay, whether the trend is big or small, there's always some form of a channel present for every single price movement on the chart. This is what we know as price action traders. And this is what gives us edge, and this is how we can identify where the market is going to go. The initial tight channel has a break push to a new extreme. Market is about to open, but market keeps working lower, and we keep trending lower. So because I have so many pushes lower after new extreme has already been made, this forces me to right now ask myself why the structure is still too bearish. And the explanation is there's most likely additional wider channel. There's too many lower highs and low lows. So this is why I'm drawing this wider channel now, after the original tight one has a small break push to an extreme. Market is correcting, and we actually have right now a second entry short if there's going to be break below this signal bar right here. New low, first break below, pull back, second entry short. Market moves in pairs of twos, and on top of that, this is also triple test. One tap, double tap, triple tap. So this is actually a very nice looking setup context wise. Problem is the signal bar is very weak. Okay, I didn't take the setup. I wanted to see stronger bar. I don't like the fact that there is bullish body, not the strongest bar. Also, the trend is not fully confirmed. You can see it's not that long, it's fairly short, but it is two-legged pullback, it is triple test. Downtrend should get new extremes. So if you're more advanced, a little bit more aggressive, you can consider. If there is some stronger bar, it's much safer setup to consider. Break a new extreme and downtrend played out. So because downtrend played out right now, I'm going to pause looking to go short. Okay, now we can have brand new market cycle. How do I identify new market cycle? I'm going to observe what price action does when it comes to EMA, the exponential moving average, and we are breaking above EMA strongly. Okay, so if I can see after breaking new low, market trending in the opposite direction and breaking through the EMA, it's most likely right now reversing into a bullish trend. And we actually have lowest low, no break below, no break below. So first attempt to sell, break higher, second entry short here, and it reversed all the way back up. So this right here is actually a felt second entry short, and we can actually think about reversal quickly. Why? Well, because we're in a trend range. This is not trending market. Because we're in a trend range, we expect trends to pivot quickly. So after breaking new extreme, it's safe to assume that right now market, if it's above EMA and we have a reversal pattern, it should go higher. So this is a great felt second entry short reversal pattern inside the channel of the EMA. There's some tail at the top, but not that terrible. You have a small break push to new high, uptrend played out, and now we have actually high impact news. So I'm not going to be taking a setup around high impact news. We're going a little bit sideways like this, and right now I'm going to draw small consolidation like this. You have a new high, first entry long, second entry long. Can I consider? Not really. Honestly, when I'm watching a structure like this, especially after news, I'm not even looking for trades. I'm just sitting on my hands waiting patiently because EMA is exactly in one of these bars. It's too choppy, too sideways, no clear bias, all trends played out. So I don't like even looking for trades in such a mess like this. You want to be looking for trades when the context is clear. This is pretty much no trade zone. You have a second entry long, but problem is it's closing exactly in the middle of the range, actually a little bit above. Okay, so you want to buy very low or sell at the very top. I don't think it's a good trade. It's too much in the middle, close too far up, it's too stacked. And now you actually have, this is only third entry long, but you can consider this as a sort of multiple test. Now I didn't take this setup myself as well, and it may look like I'm about to cherry pick a trade, but I assure you this is not my intention. Actually, if you're more advanced and you have some experience, you can actually consider this because the second entry long formed bad. It's in the middle of the range, close too far up, but now that you're buying at the very bottom like this, probably a lot of early bulls, they got trapped, and now that you're buying at the very bottom, you're most likely going to go higher. So if you took this trade right here, you're definitely advanced, and I cannot blame you. I'm not going to mark it for a textbook easy because you definitely need to have some experience. You need to understand what's happening here. But going long here is definitely not such a bad idea because you're buying at the very bottom. Nice reversal tail momentum. You're probably going to pull back. I don't think you can take high low now because once again, same problem as here. It's simply too much in the middle of the range, closing too far up. So we cannot take high low like this. It's too big, too much in the middle. Break, push to a new extreme, and uptrend played out. This would actually be very tempting failed breakout because most breakouts out of trend ranges will fail, and on top of that, I have one leg up, break, second leg up. You can see measured move almost reached. You know, this is fairly decent trade, uptrend broad break, new high, visual 2-legged pullback. This is not a horrible trade. If you took a short here, no problem. I was thinking we may get lower high confirmation setup because it initially triggered below bull bar, so you have to use the bull bar entry. Can I get lower high? No lower high. Market just dropped lower, which is a shame, but these are the trading range rules. Buy low, sell high, and most breakouts will fail. Can I fade the breakout here? Okay. Can I fade the breakout? I cannot. Why I cannot go long? Because the push down was too steep, too strong, and the break is tiny, okay? You want to see some broad break, push to new low, because when the break is so tiny, you can easily make a case for slightly wider channel, and it doesn't even distort price action at all. You can see there's almost no difference between these channels. So this is why we don't like these steep moves from the top all the way to the bottom. You want at least touching the EMA. This is why I'm not looking to fade, because it was too strong, too steep. There was no pullbacks. I'm just waiting patiently. I still can't go long just yet. You drop all the way down without even touching the EMA. It's a bit too bearish. Okay. Downtrend played out with the break. Push to an extreme. We're breaking above EMA, so what I can do, measure one leg down, break second leg down, something like this. Once again, you can see market moves in pairs of twos. Because we are in a trend range and we are bouncing off the important low, the day key level, I'm gonna right now draw my uptrend like this, not expecting wider downtrend. Why am I not expecting wider downtrend like this? Number one, we are bouncing off the low today and we are in trend range, okay? So why the market would continue to go lower while we bounce off the range support and we're back above EMA? Okay, there's no reason for market to go lower. So number one, we are in trend range. Number two, we're bouncing off the low today. Number three, we broke above EMA. And number four, it looks like kind of like one leg down, broad break, second leg down. And once again, market cannot continue working lower indefinitely. One leg, broad break, second leg down. I really like these broad two-legged pushes. It's a bit harder to understand when you're a novice trader what I'm talking about. But once you get some experience and you start seeing these broad moves, this will help you not to look for these secondary channels and expecting new low. This will help you adapt more to following trend and structure, and you will right now adapt more bullish. Felt second entry short would be great, but form with the terrible signal bar, not even at the EMA. Can we take it? Can I get a second entry long? No second entry long, new high can reset. But market keeps going higher on the geometric formation. It looks like there is some mini spike and a channel pattern, something like this. We can see looks really great. Perfect market geometry. I'm going to redraw the downtrend. I have a second entry long here, which is very tempting. You have some small support, but the downtrend is in play. The downtrend is in play, so I simply cannot really break the rule and go long while the downtrend is in play. But it looks like spike up channel pattern. Can I get a high-low confirmation setup? Once I have a downtrend in play like this and I expect new high, I'm looking for a lower high confirmation like this. This is what, excuse me, high low. This is what the high low is for. When something is wrong with the second entry, downtrend is in place below EMA. I want to see high low confirmation setup. High low never formed. We have a break in new high. Another push to new high. So it's looking a little bit too bullish. Can you take failed second entry long? We don't like this failed second entry long because you want second entry long to form below EMA. Okay, this is too steep. You want to have new high first entry long and you want to have second entry long below EMA. Now because the second entry long is above EMA, this failed second entry long looks like exhaustion and is a little bit too steep. You're selling right into the trend channel line. You need a lower high in this example. Okay, so we can't really sell just yet. The market continues to go higher. It's looking quite bullish. You know, I noticed some traders are already predicting some wider channel at this point, which is solid play, but you know, our first channel just played out with a breaking new high. I don't think we can take a long here. Something's telling you it's going to work, but it's a little bit too early. You just have a breaking new high. I think we really need a high-low confirmation setup above EMA to really confirm that this secondary channel is valid. Can I get a high-low? No high-low. But because the market keeps trading higher like this strongly, this is significant push phase. This is telling me, okay, even after breaking new high, market keeps going higher and it keeps going higher and it keeps going higher. There has to be some wider channel. So trends are always evolving. You initially follow the tighter channels, and as you get more price action, as the picture becomes clear, you can adapt to a little bit wider channel. So right now what I'm going to do, I'm going to draw a channel like this. I still get confirmations. Fits perfectly. You can see how many bounces I get here and here and here. And off the top, a lot of bounces off the top. This is exactly what we like. You can see how structured it looks. And by the way, this is why we like using tick charts. You can definitely use 1 minute chart, But tick charts are just more symmetrical. The market geometry is easier to read on tick charts, so why would you limit yourself to time-based charts when tick charts allow you to see more details? You can find these channels easy, so this is why we prefer to be trading tick charts. So right now, what is the bias? The bias is bullish. We have established uptrend. I'm not thinking about selling. Only thing that's going through my mind is waiting for correction phase to end somewhere around the key entry point, either EMA or the trend line. Okay, market keeps going higher. I want to see the hypothesis setup, but I have come reset. Okay, we're going quite sideways, and this is interesting trade. We have second entry long. We have second entry long right here. I was on my break here, so I didn't take it, but if I was here live, I probably would pull the trigger. Problem is, it looks a bit like counter reset scenario. We've been going sideways for such a long time here. It looks a little bit like new high, first entry long, almost double top. It looks like market is resetting the count, spike down. If you took it, I can mark it. It's not a bad setup. Once again, it's a second entry long at the EMA, but it kind of looks like counter reset scenario given how sideways we're going. Such a big bearish spike down, you know. But once again, trading is about taking a chance. It's not a horrible setup. You can definitely consider. It ended up being a losing trade. Normally, you would re-enter here on the, let's say, real second entry after counter reset. But because here I have terrible signal bar, I really can't re-enter. If you have some better bar here, you have to re-enter because now you're finally closer to the trend line. This is where a lot of smart traders will go long. But on my chart, I can't re-enter. Can I get high low? No high low. And market keeps going higher. Actually, I have a high low breakout pullback here. I kind of missed it. Generally, you want to take high low before you're going to break the highs. Okay, now you have a new high that broke all of these highs. It's not part of the previous second entry long, but it is a breakout pullback. It is a breakout pullback. You can see a consolidation, breakout pullback. And this is a solid high low. Now that I'm watching it, you know, this is a decent high low because it is a breakout pullback. This makes it a little bit stronger. Consolidation, breakout, most breakouts fail, pullback, testing the key level, testing the EMA, and high low. Market keeps going higher, can reset. I have overshoot. Okay, so what does it mean? After overshoot, we can have stronger correction in the opposite direction. Okay, so if there's going to be textbook second entry long at the EMA, I have to skip after overshoot, but I have to draw the downtrend. I even like drawing it a little bit wider because overshoots really generate stronger pullbacks. So just to be safe, I like to be predicting a little bit of wider correction after overshoot. You can never go wrong respecting the overshoot. You can always re-enter later on, but respect the overshoot. Right now, what's going to my mind, I want to see break new low and then fill second entry short above EMA. Almost new low, but I'm already breaking above EMA. So this is a little bit changing things because why we are not making push to new extreme. You can actually make a case for trend line being a little bit tighter, but you have such a significant pushback above EMA. So now, because we're most likely not going to test the new low, the trend was so strong and long, we expect new high following the trend line rule. I'm actually taking into consideration felt second entry short, and now we have it. New low, first entry short, pullback, second entry short failure. You can see how far we traced this downtrend. So we're not going to get new low, and this is why I actually like taking felt second entry short while it's quite broad. Normally you like to see felt second entry short, as I say a lot, part of one move, but in this case, because the retracement is so deep, you're closing too far up, we're going to test the new high because market cannot really create new low after such a deep retracement. There really cannot be second leg down like this. Okay, there can be second leg down if it forms, let's say, somewhere around here, but because you retrace so far up, market really cannot form a second leg down after such a deep retracement like this. So this is a felt second entry short. I actually took this setup myself. My only trade for the day actually, felt second entry short. Funny enough, continuation again to test the new high. Very good setup lately. And market keeps going higher, keeps going higher. You can see how nicely also it is gliding off the trend line, off the other side. So giving you confidence that, you know, the buyers are buying at the key level. And I can see that the push to new high looks very structured, okay? So after breaking new high, you'd expect some sharp sell-off, correction, something like that. But price action is slowly but surely chopping higher, chopping higher, chopping higher. This looks like the trend can be a little bit wider. What if I'm going to draw a little bit wider channel? Can I get some nice channel? And I can. Actually, the price action is not distorted at all. I'm still getting a lot of confirmations. This still fits pretty well. So because I still get a lot of bounces and the overall trend still looks structured, I don't play this as a breaking new high, and I'm going to play this as the trend is still in play. But I have to redraw a short-term downtrend because there's always a correction inside trending market. Okay, this is definitely confirming that the trend is in play. Almost second entry long, but there is no trigger. Okay, we have to wait for trigger. Had there been trigger, would have been probably tempting, but because there's no trigger, I can't really take it. You can see there is no trigger matching high, so setup didn't trigger. I cannot go long now below EMA. It's below EMA. It's not double trap. Double trap needs to close above. So I cannot take just a third entry long below EMA. I still need some high level of EMA. That never formed. The market keeps going lower, so I can redraw slightly wider channel like this. Price action is breaking above EMA. Significant decisive push. So you expect new high. You have a decent setup. New high, first entry long. Pull back, kind of like a second entry long here, but it's enough for the EMA. It's enough for the EMA. Tempting setup, but it's enough for the EMA. Can't really take it. We still need to get new high. Okay, this would have been great setup. This would have been really nice. New high, first entry long, pull back, second entry long. If you have better bar, we need better bar. This signal bar is terrible. Look at the tail at the top, but it is a second entry long. EMA keeps holding. You need new high. Once again, you're no longer expecting new low because the retracement is too significant. Bigger pattern in price action takes precedence. So I'm no longer expecting new low. I'm just looking for a new high for this channel. This is the main target, okay? It's okay for this downtrend not to get new extreme. This is kind of like secondary goal. This is not significant primary goal. If you can see such a decisive push above EMA and deep retracement, just forget about new low. This can happen, okay? Because a lot of buyers are just buying with the direction of the main trend. Second entry long, but horrible signal bar. It's a shame because it ended up working nicely. New high tested, perfect price action. And now the market is about to close and a lot of profit taking. This is the overall structure for today. We started with a little bit of a consolidation. Broad 2 legs down, main key level held, and we transform into nice uptrend. You're not even thinking about selling because this key level wasn't really confirmed, and by the time we reach this key level, we have a nice uptrend working higher. There are a couple more aggressive setups. For example, this one right here, you can definitely consider this one as well. And this fell breakout, if you're going to use the double entry, is also a nice setup. But I hope you had a good trade. I'm going to wrap it up, and I'm going to talk to you next time. Feel like you're trading.